How a loan moratorium turned into a nightmare, a borrower's experience. The COVID-19 pandemic has had a significant impact on the global economy and has led to many individuals and businesses facing financial hardship. One way that individuals have been able to cope with this hardship is by taking advantage of loan moratoriums offered by banks and financial institutions. However, for some, like the individual in this case, a loan moratorium can also become a bane. The person had taken a home loan, and due to the pandemic, both he and his wife lost their jobs and were unable to make loan payments. They decided to take a loan moratorium to provide temporary relief. However, due to the economic impact of the pandemic, their bank increased the interest rates and also added interest on the moratorium period, which has significantly increased the overall cost of the loan by almost 50%. The individual not only lost their job due to the COVID-19 pandemic, but also struggled to find a new source of income. This made it even more difficult for them to make loan payments and forced them to take a loan moratorium to provide temporary relief. The increased interest rates and added interest on the moratorium period has made it difficult for the individual to even consider the new EMI amount, as it has shaken him completely. They are now left feeling helpless and stressed as they do not understand how to pay such a big amount. The bank representative advised them to sell their house if they were unable to pay the EMI, which is a big decision and should not be taken lightly. The person is now left wondering if the loan moratorium was a boon or a bane for them. This story highlights the potential consequences and costs of a loan moratorium for the borrowers. While a loan moratorium should provide some relief, but it increases the overall cost of the loan and makes it more difficult for borrowers to repay the loan in the long run. It's important for individuals to consider the potential consequences and costs of a loan moratorium before deciding to take one. It's also important to understand the terms and conditions of the loan and to explore other options before making a decision. If the individual fails to pay the given amount, then the bank may report the overdue loan payments to credit bureaus, which can negatively impact his credit score, and the bank may take legal action against him to recover the debt. This may include obtaining a court order to seize his assets for sale. The individual in this case is now left with a difficult decision to make, trying to balance between their financial obligation and the reality of their current financial situation. It shows that even with loan moratoriums, the financial burden of a loan can still be a heavy weight to bear.